We now have the pleasure of hearing from Stuart Tonkin, Northern Star Resources. Stuart's a mining engineer from West Australian School of Mines. He has more than 20 years' experience as a mining operator, contractor and senior executive. His previous roles include Chief Operating Officer at mining contractor Minco and senior operational positions with Oxiana and Newmont. Stuart joined Northern Star in 2013 and has played a leading role in the company's exceptional growth, helping devise and implement the operational strategies, exploration initiatives and transactions, including the merger with Saracen, which have underpinned the rise into the ASX 50 company.
Thanks, Michael, and thanks Canaccord, major sponsor for Diggers, and acknowledge Miles and Sharon and the Diggers Committee again for putting on a fantastic conference and offer that online to investors either in the East or international. And in fact, yes, last year there were 3 of us up here on stage announcing the merger between Northern Star and Saracen and the news that was going to be developing that platform from that point. And whether it's Darwin's natural selection or a Stephen Bradbury Olympic strategy, you have me here today alone. And look, I'm super excited to really be presenting a significant profitable growth platform that we have created on a simplified business with scale and quality. I would like to acknowledge and pay respect to traditional owners in all of the many lands that we operate here in Western Australia, in the Northern Territory and in Alaska. Now, for Northern Star investors, it's a pretty exciting time, the platform that we've created. We have a proven value creation formula, and we do so in a respectful and responsible way. We offer significant profitable growth, growth in our margins, growth in our mine lives we've reliably done over many years, and ultimately convert through to growth in cash flows and returns to shareholders. We deliver this growth through a responsible and sustainable lens, and I'm going to cover a lot of that content with you here today. We have an established ASX 50 appropriate governance structure with a new non-executive chairman in Michael Chaney. We have sector-leading safety performance across our business at less than 10% of the industry indexes, and we continue to invest and train our people and to improve our outcomes in regard to safety and zero harm. In recognising climate change, we have committed to net zero outcomes and targets by 2050, and we will map out the milestone targets and actions available to us in our annualised sustainability report and track progress against that. We already know that 70% of our greenhouse gas emissions come from those Scope 1 and 2 energy generations that feed into our mines. So we see immediate opportunity to offset those greenhouse gas emissions with renewable projects in renewable energy projects that come into our mines to offset 70% of that energy in that Scope 1 and 2. So to look at what we have collated with the merged businesses and what has been achieved in a very short period of integrating 2 significant companies with a great track record and significant assets in Tier 1 locations. We now hold over 21 million ounces of reserves in gold. We have 56 million ounces in resources, and we have a very proven track record of converting those resources and extending our mine lives, and particularly adding and growing reserves and resources in a per-share basis. So it's very accretive for shareholders. You can see here in a simple slide, and I know I've got one Chief Operating Officer in the room, I've got another one in Alaska. They will say that they're very busy, but I like to look at this in a very simplified portfolio to say half of our business is here surrounding us in the goldfields of Kalgoorlie, and then about 500 kilometres to the north, starting at the Yandal in the south at Thunderbox, through up to Jundee in the north, and of course our North American asset in Pogo. The important part of these locations is we term Tier 1. You really need to think about what that means in the current climate, and we can't operate in areas where we've got so much benefit and control over the systems and process and the maturity of the developed regions in which we operate. It's fantastic to target this, and it's a very conscious decision to choose where we will operate, and it gives us a head start and reduces risks, absolutely reduces risks for investors looking at investing in Northern Star. So over the next 5 years, we will deliver profitable growth to 2 million ounces per annum. You'll see here in the chart how that's delivered. We are investing in capital growth in the near-term years, and I'll go through some of the detail and content of where that capital's been expended. Fundamentally, as we invest that capital, we will drive down our all-in sustaining cost and expand our margins, therefore creating greater cash flows. We also, as the capital rolls off, will have a declining all-in cost, allowing us, and I'll show you the balance sheet later, to continually build our bench strength in our business. This guidance forecast excludes the Kundana assets that we recently announced a sale deal with Evolution Mining for $400 million. And it shows the maturity of a portfolio management attitude towards simplifying and looking at a long life asset portfolio. The guidance this year midpoint will be 1.6 million ounces. We achieved 1.6 million ounces last year at an all-in sustaining cost in Aussie dollar terms of $1,525 an ounce. Importantly, it's second half weighted as we grow into production areas at Pogo and lift into higher grade in the Yandal belt. This is another deliberate strategy in where we operate and what we target. Our geology first lens in through the merger and acquisition side of building up that business. It's always through that geological lens, and we've got significant technical bench strength in our business in this regard. So to look at what we're surrounded, a century of mining has occurred on this Golden Mile, and we have now consolidated the consolidated gold mines that Alan Bond did in 1989 under one single ownership, and we're investing in extending that. There is phenomenal opportunity here in the goldfields, and the production that shows the history, it shows the current resource in the future, and that bar, we're just going to have to keep lifting that x-axis and y-axis and pushing those charts up. To recognise Yandal, to comments on previous presenters, 3 decades of continuous production on that Yandal belt, and we're stitching back the continuous about 300 kilometres of strike up and down that Yandal greenstone belt. And when you look to Pogo, it's an 8 gram, very, very high grade ore body. It's produced over 4 million ounces to date, and it has over 6 million ounces at 10 grams in resources. So it's already a 10 million ounce system. It's in a camp scale district that's untouched, and it's only been operating for 14 years. So we absolutely strategically get our hands on these assets, and we use our skill set to liberate value that was previously either unrecognised or uninvested in on those previous assets. So here to Kalgoorlie where I stand today, and it's awesome to be back here where many of the team actually studied here at the School of Mines 25 years ago, albeit, but to come back and actually operate in the city with the team. We've got over 3,000 employees and contractors here in the city of Kalgoorlie-Boulder. And I encourage you to go to the lookout and stand at the lookout and get an appreciation for the scale and size of the super pit. And you'll see the substantial progress we're making on the OBH cutback that's rectifying that pit wall slip that happened in 2018, which fundamentally was the catalyst to why that asset was sold from the majors. So when you look at the outlook, we will restore this asset back to its historic highs of sort of 700,000 ounces per annum, and we'll have that done by FY28. But I want to go through some highlights of opportunities to be able to do some other things with this asset that really hasn't been recognised. And this is a very different asset to than what we acquired 18 months ago. We've made a lot of progress in uncovering the opportunities, and hopefully I can articulate some of those today. When you look at the overlay plan of the area, you can see some distinct production fronts. The pit wall slip pushed mining activity to fewer working areas, in fact one, and the reliance on drawing down the low-grade stockpiles. So importantly, we're fixing that east wall. We're opening up access to the lower part of the pit floor and the higher grade in the Golden Pike. And we're doing a large capital investment in removing the Fimiston South cutback to get access to that ore, and we continually improve that strip ratio as the years go on. In the top of that slide, you'll see the stockpiles. To highlight this asset, there's 125 million tonnes of low-grade stockpiles there that's already been spent the mining costs on. It's already sitting there adjacent to the plant, and there's 2.9 million ounces of reserves contained in that stockpile. So the opportunity for us at the moment, there's a 13 million tonne per annum plant, is to look forward to what could we do with liberating the value from these areas. The bottom table is free gold. When you talk about free gold, there's a metallurgical definition, but I call free gold when I mine the same ore and I just get more gold. And there's 35% extra ounces that's coming out of our existing mined shapes and shells that was not in the reserve model. And it is absolutely free material coming in to our production profile. Importantly, we're getting a greater understanding as to why. You don't want less gold or more gold, you want the exact amount of gold that you know and have modelled and have interpreted it to be. So what is happening is the primary lodes are being, it's such a massive system, the primary lodes are being well understood, but all the linking structures that contribute to that. From an underground lens, we would be selective and take out those primary lodes, but from an open pits perspective, we take it all. So when we've moved volumes from 30 million tonnes per annum when we first got in there, we've moved it up to 60 million tonnes per annum. Majority of that is waste. We're going to move volumes up to 80 to 100 million tonnes per annum to get the Fimiston South uncovered and open up the lower ore bodies. But this is a very, very interesting and beneficial phenomenon for us, that these linking structures bear a lot of grade. That means we do not deplete that lower grade stockpile, and that we add ounces. We reduced our strip ratio and we add incremental revenues into a same fixed cost base. So again, watch that space. We will close those reconciliation values, incorporate that modelling with greater geological understanding into our forecast and into our resource and our reserves. Another exciting chapter that's not in the plan. We need time with this one. The beast is so big to evaluate. We actually need a lot of time to get into this one. This is the underground, Fimiston Underground. Now, we operate Mount Charlotte, and we've got nearly 2 million ounces of resource that we're converting and operating continuously at Mount Charlotte to the north. But this is the continued structure of the underground around the super pit, the Fimiston lodes. This is only one quadrant of the super pit. We're making sure we're not interfering with the pit activity. We've put the first new portals in the northwestern wall in 2 decades. First new undergrounds into this district in 2 decades. We've got a significant drill drive we've developed, which will...
Ladies and gentlemen, lunch is served.
We're going to put diamond rigs in there and drill multi-year campaigns to define and open up this Fimiston. And we already have, since ownership in 18 months, the joint venture and now under the combined business, 4 million ounces of inferred resources that were not there in acquisition of this asset. That's just the start, and none of this is in our forecast plan growing profitably to 2 million ounces. So there is a phenomenal opportunity here at Kalgoorlie in the super pit. Now, what do you do with it? We've found it, we're mining it. How do we get it through the plant? There's 13 million tonnes per annum capacity there at the moment, and we're hitting records optimising and tweaking that outcome at that plant. And I never thought I would be saying that 13 million tonnes per annum capacity wasn't enough. But it isn't enough, and there's option studies underway at the moment to understand what could we do to bring forward some of the cash flows from the asset in the stockpile and actually look at the simplification of the plant, fewer bigger moving parts as in the mills, and simplify that and lower the overall cost per tonne through the processing plant. So those studies are underway. We'll be working through those. You can see a couple of options there to move us from 13 either to 17 or 22, and we'll look at the second half of the year to basically articulate what the benefits are and the return on invested capital is for those. But that's something where the proceeds from the sale of a Kundana asset, as an example, would be a phenomenal return on invested capital to rotate that capital back into something like the expansion here at Fimiston. Now to the north, to our Yandal operations, and I spoke about, we've got nearly 300 kilometres of continuous strike up and down that belt, with a phenomenal mine, the north being our Jundee operation, a number of satellite pits that contribute to fill that mill up at 3 million tonnes per annum, and in the south, the Saracen asset that came into the south in Thunderbox, and it's the 3 million tonne per annum capacity, and it drives off the Thunderbox mine, the open pit mine, as well as commissioning an underground into commercial production on Thunderbox. There are a number of ore sources that we have de-risked, identified, sequenced in the mine plans up and down that belt. And again, the simple way of growing this district is purely through a mill expansion. We're doing that at Thunderbox. We've committed to that. We've hit the button on that project. We have about $180 million going into that district, as well as $90 million going into the Aurelia pit development and associated haul roads to get down to Thunderbox. Yesterday we awarded, or this week we've awarded the expansion through to GR Engineering Services, a $100 million contract to start that. Very capable and credible party to work with here. And again, this is a very simple, and I'll say simple because they're good at it, this is a very simple mill upgrade. There's a large 18 megawatt mill coming from Germany to get installed here, and the associated infrastructure to take it from 3 to 6 million tonnes per annum. And this simply takes us from around the 450,000 ounces per annum to 600,000 ounces. And we do it very quickly. We do it within the year, and you start to see that growth on the chart feed back up to 600,000 ounces through into sustainably in FY24 forward. Now to our Pogo operation in Alaska. And look, first off, I would love to just say a massive thanks and huge appreciation to our team there. They have operated through a majorly disruptive year. You could not comprehend, sitting in Western Australia, you could not comprehend the things they've had to do just to keep the mine running and operating. We're alone working in Alaska generally, but through the times of COVID and the restrictions on quarantining, a lot of our team is local residential Alaskans, but we do rely on expatriate Australians to travel. We rely on lower 48 state Americans to travel, and we have had over half of our team have COVID and managed through those processes throughout the year. So the vaccines have been rolling out. We're seeing less disruption related to that, but I absolutely want to recognise and commend them for they achieved their guidance last year at 200,000 ounces. We're still growing that mine. We're still expanding the plant to 1.3 million tonnes per annum capacity, and we'll grow this asset out to 300,000 ounces within 2 years. So I do want to make sure that there's a legacy story around what we've done there in the last 3 years. This is a world-class asset that will continue to grow. It's in a camp-scale district. We're continuing to explore and develop in the region. We've obviously still had the rig sitting on our Goodpaster discovery on the other side of the river, and we will also stretch our budget regionally to grow this area out. Now to our balance sheet, and I think my CFO, Morgan Ball, has the easiest job in the world. $1.1 billion of liquidity and a very capable operating team that just keeps printing cash, and he just has to keep stuffing it into bags. But ultimately, this is a complete business. You've seen what we've able to do. You can see the capital investment this year in as much as feeding that organic growth to deliver those profitable outcomes. We're also been dividend paying consistently for over a decade. We're still funding the resource reserve growth. We're spending $140 million this year in drilling, in exploration drilling on our world-class geological systems. And very importantly, we still retain cash, which gives us optionality to continue the inorganic opportunities that we do see arrive in all of the gold cycles that either feed into the existing operating centres that we have or create new opportunities for us in that standalone sort of plus 200,000 ounces per annum assets. So we have the team, we have the bench strength to be able to convert and utilise. Please don't think that's a lazy balance sheet. Given our track record, we believe we can get superior financial returns by utilising that balance sheet the best we can. Look, when you listen to some of the talks over the recent days, you will hear or discuss the faces of the challenges in front of us. We absolutely are looking at each of those and understanding where Northern Star racks up against those challenges. And we do also see continued opportunity. We never sit idle. We always look to optimise and improve on our portfolio. Absolutely delivering that consistent guidance. Delivering what we said we would do is one of our core values, giving those results. And you will see us work hard to map out and deliver that profitable growth over the next few years. You also see us migrating down the cost curve. It needs that capital investment to get the economies of scale, to liberate some of the synergies that we had identified in the merged businesses with Saracen and Northern Star, and they will take time to come in, but once they're in, they're sustainable, lower cost improvements and synergies that will be delivered. And I guess when you look at the investment thesis for Northern Star and you compass up against the rest of our peers, we absolutely have some of the best assets in the best places in the world. I will absolutely say that. We focus on Tier 1 locations and it's deliberate. We have a significant opportunity to grow our production, to grow our margins and grow our mine lives, which ultimately adds value for all of our shareholders. And we have the operational and financial acumen to continue to develop and expand on this business. And everything that we do, we integrate sustainability in a responsible way to deliver our outcomes. So with that, I want to close it off and open up for questions. Thank you very much.
Thank you very much, Stuart. A question, please. Down on my left here, the front.
With the acquisition, so much gold, are you still on the acquisition trail?
Okay, so the question is, are we still on the acquisition trail? We are always looking and evaluating options, whether you're buying ounces or finding ounces. We have a substantial corp dev team that reliably understands each of that. So yes, the answer is yes, we always look at those things. But what we see immediately is phenomenal organic growth opportunities and value creators for us. And you'll see active portfolio management. So even the sale of our Kundana assets, that is a very logical consolidation of that belt. And if I could say win-win, it absolutely meets what Evolution needs, it meets what Northern Star needs, because if we grow to 2 million ounces, it would have been less than 5% of our portfolio in production. And so we can focus our team and our effort into value creation at something like KCGM. So the portfolio management means buying and selling, optimising and simplifying life. So it's part of our DNA, it's been part of both Saracen and Northern Star's journey of how we've created such a great platform.
Any other questions out there? Stuart, thank you very much for that very comprehensive presentation today.
Thank you.
That's it for this session.